gonna be fun. Birthday brain right now. She is straight celebrate mode. So let me just go ahead and tell you, we do this every first and third Friday. We broadcast live on Facebook. So hello to all our Facebook fans and to all of those that are online with us through Zoom. We just want you to know this is very generic. Our whole purpose is just to give you a lot of in-depth information about different things, different financial strategies, tools, and everything from what we're going to talk about today, insurance to retirement, and how about how to go on a vacation on a dime. So we don't leave anything out. So please go register for our events on Zoom by going to RitaBRowlandEvents.com. You can please go to Facebook, like our page, and you can see us live there like some of you guys are now. And then please go to our YouTube page, click and subscribe, and you'll get any updates and anything that's going on. So we're excited about today. I'm just gonna let the birthday girl chill for a second. Then she just I'm
on a new apparatus today.
So the whole purpose is just for you to get a clear understanding of your benefits, your money, your spending habits, and how we can help support you in those solutions, and just enable you to reach your financial destination. All of us got a goal that we're trying to reach when it comes to our money. And sometimes when we think about a doctor, we go to the doctor to get the help. When we need a lawyer, we go to a lawyer. When we're trying to get some muscles, we go to a what you call it?
Personal trainer.
But here, when it comes to our finances, sometimes we need to go to some people like who we're going to have today, the financial coach, Hope, or me, a retirement strategist. And we have so many different things that we do here. So we're excited about it. We're excited about today. As I just said, it's very generic approach. Don't leave here and make some wise decision that you just decide you heard and you're going to go put something in place. Make sure you sit down with someone, because this today is broad. When we sit down with you, we can narrow it down to your specific situation, your goals, your dreams, your family. And because we're all different, what we're trying to accomplish is different, it'd be important that you sit down and get that from us. So we're excited today. We're gonna let Ms. Jenkins, I think she done calm down now. We're gonna go to the thing. You ready? Okay, I'm gonna keep it going, y'all. This is about some physical fitness, about us getting some strong, some muscle, not just like you see these guns right here, some guns in our money, in our pocket. And it's important because I don't know if you guys are paying attention. I'm trying to not get too serious because y'all know I can get real serious and go all in. It's Fun Friday, it's her birthday, but the world is changing. Our financial systems are changing. The banking systems are changing. The market, all of these things are happening. And what we can no longer do is not pay attention. We can no longer not think it's important, just live life as a normal. I think it was, let me watch my mouth. Y'all know me. Javon and Darlene, help your girl out, okay?
Okay, I'm gonna try to help you.
You gonna try to help me?
I'm gonna try.
So we was in a really tough time last year. Things were happening. So I think we just need to be wise as to what's really happening. Pay attention. Don't be just like, you just so happy to get back to normal that you forget what is truly happening behind the scene. So I just want you guys to have your awareness up, your discernment, pay attention, read. Don't just like looking for something fun and something, on Facebook, somebody got a new outfit and they posing. Let's look at what's really the laws are being changed so we can understand how we need to build up our finances and what we need to be prepared for. And so what we're going to share today is the 10 reasons the rich use life insurance to create wealth. It's one of those things. I've been in this business 32 years and Darlene just as long, Javon about 15. And what we know is that people misunderstand what life insurance is. Many people think it's just about to bury you. When I say that is the smallest part of it, that is what it was intended way back when maybe your great-great-great-grandparents got it, but it has evolved so much that the rich use it all the time to create wealth, and we don't have a clue what that is. So what Dr. Javon Walker is going to share with us, Javon Jackson, Lawrence is going to knock you clean in the head. What she's going to share with us, and we're going to help her just talk about what the rich do and why do they do it. And she's very passionate about it. I'm going to let Miss Darlene, I think she finally got it together to do an introduction of Miss Javon.
Oh, no, you better.
So
I'm just sitting here enjoying my birthday. Go ahead.
Oh my goodness, y'all. You know what? She's back because she used to celebrate for a whole week or a month. The last couple of years, she's been a little, just sticking to the day. I think she back, y'all, to want to just enjoy her birthday forever. So I think we may have to deal with this, Javon, to the end of July.
Not again.
So we have here Miss Javon. And I met Javon like around 2006. We were in this other business together. And I just remember the first time I heard this young lady do a presentation. She had so much energy. She had so much power. She just kind of, some people would just have you like all in. She had me all in. And then I think when I met her, she was in her early 20s. And so it just kind of blew my mind that she was so young and so powerful and so passionate and just really doing big things. And she was in the real estate business. She was helping people fix their credit. And she was doing some other things behind the scenes. So she joined us about 15 years ago. And if you heard of the book, and we're reading that book again, and Javon has made me think about, I thought about her when I was reading a book, Who Moved My Cheese? Because Javon came here with Miss Antiquated Darlene and Rita over here, still like we're doing this business. But what we had not realized that things, this whole Facebook thing and coming live, things have been changing and we hadn't begun to change with it. And Javon came and just kind of shook it all up. And we still was trying to stay in that old mode. And she kind of pushed us to a place to move us out of that stuck place. So she is truly doing big things in the industry. She's well sought out on radio shows. She speaks on many platforms. She is a insurance advisor, and she is the president of Good News Financial Investment Advisor. So she is a registered investment advisor. So you need some help about your stock accounts that we can't help you with. She's part of our team. And so she does a lot of good things. She has a book out called You Be the Bank, Finance Yourself Through Wealth. She has a workbook that go with it. She's showing it to you on the screen now. Feel free to get your copy of it. She's very passionate about
They
it.
can see me on Facebook.
Yeah.
Can they see me on Facebook?
Yeah, girl, we got.
I don't. I'm looking on my cell phone. I don't see myself.
So y'all
Like,
hear
I
her,
see you guys.
You see how powerful is she? Just gonna take
No,
over.
ask them. No. Seriously, ask. Oh, now okay. It's basically when I talk. That's when it shows.
You see.
Oh, okay. Gotcha.
And she's
okay.
always been like that. See what I'm saying? Out of control. That's who she is. But we love her. We love her. I can't see myself because you're not talking. You see, it's Financial Fun Friday. These jokers know how to have some fun and act up. So just be prepared. Now. So she loves spending time. My last thing that she loves spending time with her husband and her 10-year-old daughter Jada and her 2-year-old Lauren. It's important to know that there has to be a balance at work. And so Javon, we just want to thank you for being a part of our team and for really helping us to see things that we were really a little stuck in. So we're excited today for you. So we're going to just come off this little screen, let you talk to us and get this thing going about these 10 ways to wealth use life insurance. So how you doing this morning? You about to have the screen.
I'm here now. Yay, I can see me. I'm doing wonderful. Thank you, guys. I love you all so much. It's a celebrate. Happy birthday again to our one and only Darlene. It's an exciting day for Financial Fed Friday. And listen, I tell you, you said something that made me, you really said a word as you were merely just sharing your experience about me and what I've brought to our team. But it was prophetic because what you said about how I came and just kind of helped open the eyes, for you all to see that things had changed, right? From we went into this social media era and technology and all of that. Well, that's exactly where we are economically. Like, that's what we do as a whole. Like, our team, what we're doing, the same thing that I did for our team on a professional level is what we're doing for all of you who are listening to us on a financial level. Like, things have changed and we are coming as a voice or as a whistleblower, right? I'm not sure if that's the best term, but just to help you to see that you have to shift with the change in the financial arena as well. And we can't do business as usual anymore. Finances can't be done using the same advice that we've heard, over and over and over, that's been brainwashed into our minds. Guys, those strategies no longer work. And you have to be open to shift and make that change in order to survive. Right, point blank, period. It's, and I don't mean to jump out the gate on such a serious note, but when you said that, I was like, wow, that's prophetic, because that's exactly what we're doing. That's our position today. And what we're doing in the marketplace is coming to bring information. And that's why I titled my firm Good News. Like, we're bringing good news, right, for the people financially. Like, the gospel is based off of, we're believers as well. And so our commission is to share the gospel, right, of Christ. Well, we're sharing the gospel of financial, right, for you to thrive. Right. That's what we're doing. And so
Absolutely.
I don't know, that just really clicked something in me when you said, like, man, that was powerful. That was powerful. So yeah, I'm really honored. I'm happy to be here with you guys. And hey, let's do it. A lot of this stuff I learned from you two. So let's do it.
So you're going to go ahead and kind of let's talk about some of those reasons. You guys, this is going to be 2 parts because there's a lot of information and we don't want to try to slam it all into this 30-40 minutes. We're already a little late because of our technical difficulty. So we're going to do a little bit today and come back on the 3rd Friday. We're going to finish it up. So Javon, just kind of get into it. We'll add our little 2-3 cents to it, to help, because it's really powerful for us to understand what we don't understand. And that's what she's talking about, being able to shift our mindset to a new way of thinking, because everything has changed except our mindset and how we see it. And so our job is to bring you, as she said, the good news and to give you a clear understanding of how you need to shift.
That's right. So one of the things, we know just in our experience is that, when it comes to life insurance, I always say that it's one of the most misunderstood and misrepresented and miseducated areas of finances. A lot of times, people only look at insurance from a one-way perspective, right? And they miss a lot of, it's almost like, I always like to use the example of a cell phone, right? When we look at our cell phones, yes, our cell phones are designed for us to make calls. Like, we can make calls on this phone, people can call us and we can call out. And that's the function of it, right? But then we've realized over time, as time evolved and technology evolved, the abilities to be able to do additional things we can do on this cell phone. We can send email, we can chat, we can do Facebook Live, we can do what we're doing now. These are all things that we can do with that same cell phone. And so I always like to use that as an analogy because that's very equivalent to how life insurance. And so if we decided that we were just only going to use this to make calls in and out, we would be really doing this device, this apparatus, a disservice. In fact, we would be doing ourselves a disservice, because the purpose of these other features that we have by using this cell phone, it saves us time, it saves us money and energy. And that's exactly the impact that when you understand the wholeness or the totality when it comes to life insurance, that's exactly what it's going to do for you. And plus more, it'll save you time, energy, and money, right? And for yourself and for your family. So that's kind of, I wanted to kind of open that up, because a lot of times, like I said, we just kind of look at it from this tunnel vision, but we don't realize it's like 10 other lanes that life insurance does and solutions that it provides that most of the people that we have learned from, or that we hear from, or that we are attuned to, they're not talking about. And so I want to just first, before we kind of dig into that, also, I want to break down through some basic educating so people just can understand this is like insurance 101, right? There's only 2 types of insurance out there, right? It's either term or permanent, okay? And I like to explain this point by using another analogy. I like making things simple, to think about real estate, right? Because most of us have involved or familiarized ourselves with some form of real estate, whether we're renting a home or we're owning a home. Well, those are the 2 distinctions between the 2. Term is like renting a home, and permanent is like owning a home. And I'm actually, we're going to look at some notes from my workbook here, UB the Bank, where I outlined that in here. And so now, of course, you probably have heard about, whole life and universal life and these different types of coverages. Those all fall under permanent coverage, okay? So you got term is like renting a home, Permanent is like owning a home. So let's talk about the differences. So when we think about renting a home, right, typically what happens is the cost starts off low to get into the home, right? We don't have to pay no down payments or anything. We may pay, you know, a small little security deposit, and we're in there, right? Where when we go into buying a home, that cost is higher initially to get in. Why? Because we got to pay down payments, we got to pay closing costs, escrow, all of those things are required. So the cost is higher, right? But when we're renting a house, what we notice is that the house cost or the rent tends to go up, right? Whether it's every year, every few years, or what have you. Where when we buy a house, that typically is level. That cost is level, okay? Same thing with the premiums. Premiums on the term is going to go up. Premium on the permanent coverage is going to stay level, okay? Now, when we also think about renting a home, we know that we're not getting any equity. We're not building any equity or cash being built up in that home, right? Now, for the owner it is, but not for you as the tenant. But when we buy a house, that's what happens. We build equity. Our house value increases with every year. And that's the same way it works with a permanent policy. We tend to build some equity or some cash value is the equivalent to equity in a home. We'll use the term cash value. So when I go through some of these points, I'm going to use the term cash value. That makes you think about equity in a home. Okay.
So,
and then when we,
I was going to say, so Javon,
you want to jump in?
Yeah, just for 1 second. If you guys understand something, if you could just hear what she just said, she said the owner gets the equity. And so she's talking about term insurance. The insurance company gets the equity. So it's to their advantage for you to get term insurance because 99% of the claims are never paid. So it's pure profit for them, for you to get term because they get the equity. So if you can understand that concept, you may can't see it in insurance, but what she just said is like ding, 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 ding. They get all the money, all you do is pay all of the premiums.
That's it. You're like a tenant. You're like the tenant in the house, right? Same way. And then the last thing is that the coverage will eventually end. So at some point, you're going to have to move out of that house. You know, the lease is going to terminate. The owner may decide to sell it, right? It's going to end. Where on a permanent side, you buying a home, that coverage is designed to never end. Okay. And the reason why is because it's owned to meet permanent goals. Okay. That's what the permanent side, where the term side is purchased to meet temporary goals because you're not going to be there forever. At some point, that coverage is going to end. So if you kind of use that as an understanding to help you to understand the difference between term and permanent, that will kind of really give you a good understanding of insurance as a whole. And let me make this disclaimer. We're not biased over one or the other. We love them both, right? And we offer both, and we feel that both of them, for the right purpose, is how we use it, right? And we use them according to the right purpose. So anytime that you talking to somebody and they only talk about, oh, you should buy whole life, or oh, you should buy term only, you should really run, because that is a biased position where they don't understand insurance in its entirety. Okay, so I just wanted to kind of throw that over there. So we're not favoring one or the other. I'm just helping you to understand the difference. Now, for the purpose of this conversation of why the rich use life insurance, I'm going to be referring to permanent coverage. Okay, now the rich do use term, but the points that I'm talking about, that we'll talk about in the next few minutes, is more falls under the permanent side of coverage. Okay, so just wanted to kind of lay that foundation before we kind of jump in, so that you understand. If you guys can monitor the chat, if anybody has any questions on that, we can kind of jump at them as we go. So let's jump on into reason number one. Reason number one is that principal protection guarantees of your money. One of the main reasons why the rich use it, because they're looking for principal protection. Your cash value isn't subject to the market, right? Market losses and market volatility as it is with mutual funds and other programs, right? Stocks and other securities. When the stock market tanks again, right? And it's never a question of if, but when, right? You won't lose a dime, right? When it comes to your cash value life insurance, it's protected. And you're guaranteed that principal is not going to lose, okay? Neither is your growth either. Now there are some different types of permanent coverage. We're not going to get into that you can, but for the purposes that we're talking about, the type of policies we're talking, maybe we'll kind of break that down in a later time. You cannot, okay? So that's reason number one, that principal protection. So if someone would type that in the comments, that will be helpful, okay?
And as you clip on to the next one, Javon, you know, one of the biggest things that most folks want is not a return necessarily on their money, but they're looking for the return of their money.
Oh, how about that? How about that? Yeah, we want to make sure we don't lose. I talk to people every day and they're like, Javon, I just don't want to lose what I got. Like, I worked real hard for this. And so I get it. I can totally relate. And that's one of the benefits, okay? Benefit number two is that you also can have guaranteed growth of your money every year, okay? This will be interest rate driven based off of the economy, but your account will move forward every year regardless of what the market does, okay? And this is compounded. Tax-free growth, not the average rate of return that you get with mutual funds, okay? To be fair, you know, we are right now in a very low interest rate environment, right? And so the growth rates are, you know, kind of, you know, about 2% to 4% range. But as you really tend to start to study further, you really start to realize that the real wealth is not in the growth rate, right? Even when the rates go higher, it's in that consistent, right? That consistent steady growth, that compound. That compounding is like one of the most powerful. I think Albert Einstein had a quote that said one of the wonders of the world was compound interest. It was something like that. Darlene, you're normally good with quotes, right? It was something.
No, the eighth wonder of the world is compound interest.
The eighth wonder of the world is compound interest, and that's what you typically get. And so it's very few, like as an investment advisor, one of the things that we are like forbidden forever saying is guarantees. Because nothing is guaranteed except whole life cash value in life insurance. That's the only thing that will give you any type of guarantees. And so that's one of the benefits that you absolutely get for utilizing cash value life insurance, is that guaranteed growth of your money every single year, okay? Now, many financial advisors, they will tell you that your money would do better in a good mutual fund, right? But remember, when someone shows you an average rate of return, they can start and take that average from any time that benefits their example, right? And this is not compounded growth, but again, rather a factoring of timing as to when you enter in the market. So be very careful of that. And we know the market has swings, right? And so if that's acceptable to you, you should have as much as your money in stocks, right? But if it's not acceptable to you, a cash value insurance would be an ideal situation for you, okay? Excellent. Point number three, dividends are paid to policy owners. They are not taxable, okay? While when we think about dividends, they're not guaranteed, but many reputable life insurance companies have been in business for well over 100 years or more, and they've paid out dividends every single year. And these dividends, you know, they can range. I mean, it's been times where they were substantial, right? Right now, they're ranging anywhere between 1% to 2% on top of the guaranteed amount, right? And it definitely depends on several factors, but it boils down to how much profit the insurance carrier made for that year. And then when it's properly paid to the policy owners, guess what? Those dividends are not taxable. That's very attractive to wealthy people, because when we look at dividends from stocks and bonds and things like that, guess what? They're all taxable. That growth is all taxable, where with life insurance, those dividends are not taxable.
And
Did you guys want to jump in there on that?
And what's so powerful about that, Javon, is that we're in a season, we don't know what tax is going to be. And so to have money and equity and growth that's in something that's tax-free is really powerful, because what's unknown to us is how they're going to shake out this major financial situation we're in. And normally the shakeout comes in the form of taxes. And normally who pays the taxes? The average person that's probably listening to me. The poor has never truly paid taxes because they don't have enough to pay. And the rich got all the ways to not pay it. So who's going to pay it is you. So Judge Lauren Hand said it's not our patriotic duty to pay more taxes than we have to. And so what she's talking about is putting yourself in a position that you're paying the least amount of taxes. And I had somebody, Javon, go, I know you guys, I got 1,000 stories, just 32 years to do it to you. She came to me that her average return was like about 4.5%. And she took money out of her bank account, put it into a plan, right? And she was like, I'm only earning 4.5%. And I took her back to the reason why she did it was because her bank at that point was only getting 0.5%. It's less than that now. Now, you guys understand the rule of 72. It's going to take her 144 years for her money to have doubled in her bank account. Whereas with us at that 4.5, 5 could easily take 15 years. So you compare 15 years to 144 years. She's about 212. Okay. That ain't happening. And so understanding understanding what Javon's saying is not just, it's major when you think about your money and your growth. It's being ate up with, you have no return, taxes and inflation, you're actually saving in the minus.
Absolutely. Uh-oh, I can't hear. Are you done talking?
Yes.
Oh, okay. I thought I lost sound. Okay, I'm sorry. Yes, that is so powerful. In fact, it's funny you brought that up, because in about 2 hours, I'm doing a Clubhouse room at noon, and that topic is 5 ways that business owners are able to reduce their taxes. And see, at the end of the day, guys, we always teach people about taxes is a major pillar in your financial planning. And so we always teach you, I don't care what it is you do, you got to find something to do that will give you a home-based business so that you can maximize the codes of the tax code, right? And so you that's you got to do that, right, to actually maximize. So I invite everybody to join me at noon, where I'm actually having a tax expert, Micah Akinzuwa. He'll be joining me as the tax expert to share some of these 5 ways. I actually participated on a workshop that he did earlier this week or last week or something like that, and the information was powerful. And so we want to continue to just share those nuggets, and so get people to really start to understanding the value of taxes. I tell you, I wrote a big check this year to the IRS and the state, and I don't ever want to write that check again, okay, ever again. And so what it is going to require is those tax planning strategies so that you position yourself so you don't have to do that, okay? So let's keep this train moving, okay?
Yes.
Okay, where we at? Point number 4, a high starting cash value amount based on what you contribute to the policy, okay? So whole life policies that aren't properly designed, they will have very little cash value in the early years, okay? But a properly structured life insurance policy will have high cash value percentages even in its first year, and they increase every single year. And so this really becomes important because as you're building into a good, properly designed plan, you're able to actually start to leverage, right, that cash that's being built up. Where when you think about sometimes, when you buy a house, a lot of times we come in the door, it takes us a few years to get that equity to build up, right? Well, when your plan, when you get in at the right number and you get in at the right way. So it's so funny how this just so correlates with real estate, good real estate investing. When you have a good plan, that cash value will be there right away, right? Which actually kind of leads me into the next point, which is having access to that cash value at any age, at any time, for any reason, without taxes or penalty. And this is really huge, a real huge benefit when it comes to permanent coverage. In this case, we're talking about whole life policies, when you compare them to 401ks and IRAs, right? Which impose multiple obstacles, right? If you want to access that money before retirement. And then you are penalized if the funds you borrow from them are not paid back by a certain time and at a certain interest rate. Well, none of those such obstacles exist with a properly designed, structured whole life policy. So you're able to leave your cash in the policy if you wish, or you're able to borrow it back and use it again. The choice is totally yours. In fact, this is actually, this component or this feature of life insurance is really what attracted me to the business to begin with. It wasn't necessarily the whole life chastity, the whole life product, but it was a form of a universal life, index universal life that I learned about, and I actually wrote a book about called You'd Be the Bank, right? I started to really get an understanding from a previous book that I read that was recommended by Rita, right? This is well over, I don't know how long, is the 15 years ago or 12, 13 years ago. And that's what made me get into the business, because I've read this book and I was like, man, this is powerful. I started reading more books. I started studying more, right? Learning more. And of course, over the years, right? You really, just like technology, you learn the best products over the least best, right? And you're able to kind of differentiate the different vehicles. But to make a long story short, it's the ability to leverage that cash, right? And position yourself to be your own bank, where you never have to utilize a funding source, a financing company, or whatever. Again, you're able to build something up one time, leverage it over and over, borrow from yourself, pay yourself back, right? And keep repeating that process over and over again. Like, man, that blew my mind, along with the fact that, and another word that I learned later on down the line, which is called velocity, right? It's only two vehicles that will allow you to velocitize your money, right? And that's insurance and real estate. Let me help you.
Insurance and real estate.
Insurance and real estate. And so let me help you to understand what I mean by that. When we think about the word velocity is basically the process of having something to work for you in multiple places at the same time. Okay, so it's powerful. When you think about real estate, to help you to understand my point here, you have a property that you own, right? And what we do, we'll leverage that property by way of what? A home equity line of credit or a home equity loan, right? So when you do that, that property is not affected, right? That property is still going to appreciate every year, even though you've leveraged it and you've used it for you've leveraged it by way of a home equity loan or home equity line of credit. So now you got the money that you leverage from the property itself, you have that over here in a whole separate account. And then you're free to kind of do whatever it is you want to do with that money. If you're smart, you'll take it and invest it, right? So then that money can make you more money. But again, what's happening with the property itself? It's still doing the same thing. It's still appreciating. It's still growing. So now you got one pot of money, one investment that you made in this property. It's now working for you in over here too, in two places. That's velocity. All right. Now let's translate that to cash value in a life insurance policy. It works the same way. The cash that you built up in that policy, guess what? It's still growing every year with that guaranteed rate or I'm gonna just keep it simple, I'm not gonna confuse you, with that guaranteed rate and those dividends, but you've also leveraged it over here to pay down debt, to buy more property, to make other investments. And then you're able to you can do that in another pot, take the same money and create a whole nother pot. That's velocity. So again, once you really understand that process, you can't do that with your 401k, because guess what? Yes, you can borrow from your 401k, but whatever you borrow, it's no longer earning money for you anymore in that plan. The earning ability, the opportunity cost, you just completely lost it. The opportunity to grow that money is gone, right? Are you guys, am I still there?
Yep,
Yes,
still
you
there.
are.
Oh, oh, okay, perfect. So that's that's the most, to me, the most powerful part of understanding how the rich use it, because they understand that. And so when we start to look at people and we see, young kids, coming out of high school and their colleges are being paid for, they're buying houses, they're buying cars, without, we're looking at like, well, how are they doing that? Yeah, their parents may have, started building them credit, but maybe not. Maybe they used their insurance policies that they started for them when they were kids. They paid into it, grew it to a point now where they're now able to leverage it. And that's how they do it. So they never have to go through credit checks and all the things that we kind of have to go through to get financing, having a job and having income. None of that is required when you go to leverage that cash value from them policies. And that's what the rich have been doing for years. And we always look like, man, it seems like they're getting ahead. They're moving ahead so fast. It's because they're using strategies like this that nobody's talking about, and they're making things happen at a much accelerated pace.
Yes. And so that's so powerful, Javon. And I wish we could finish it up today, but you can see we'll be here till like 12 noon because there's a lot to talk about. So you make sure you come back on the third Friday and we're going to finish the next 5. But next week, Javon and I are going to be doing a workshop and we're going to be talking about the 3-phase roadmap to becoming debt free. That's the last thing she just talked about, using one asset to create other assets, in this case, to help you pay down so that those assets can be tax free. And so we're excited, Javon. We thank you so much for coming today.
Yes.
You are I feel like we could just sit here some more. Now I feel like, I know she said I taught her, but she see what I'm saying, how that young brain just go all over the place. We're excited you can join us next week. And so in this chat box, and we're gonna put that on Facebook as well, you can attend an event next week. There's 2 of them, one on the 6th, and that will be at 6 o'clock, and on Thursday,
Eastern Standard Time,
yes,
6 p.m. Eastern Standard Time.
And Thursday the 8th, Eastern Standard Time at 12 noon. And so we're going to talk about how you can pay off your debt in a third of the time, 9 years or less, and 3 crucial phases of debt elimination. One of the things that we know that the reason why many people can't even get wealthy is because we're in debt. And so getting you off of that that cycle of going in debt, staying in debt, and can never seem to get free. And that's one of the biggest issues why many of our clients say that they cannot retire, because they have too much debt. And Javon just talked about how you use these strategies to pay off your car. Student loans is what's hurting most Americans leave college, not with charge card debt, not with car debt, is really the debt of student loans, like in prison until they're in their 40s sometime, paying off student loans. So make sure you join Javon next week as we talk about these 3 things of how to get you free.
I'm sorry, I didn't mean to cut you off. I just want to add one other thing for those of you out there that may be saving for your grandchildren, even have young children or know someone with young children, saving through a banking policy, this life insurance, high cash value life insurance, because I have a college age daughter right now. So I'm all into the fast one. So I want to give this to you. When you use the money out of the policies to help pay for your children's college education, guess what? You don't have to claim that on the FAFSA. But when you have a 529, a Coverdale, all of those accounts, you have to list as the children's or your asset, your 401ks. But when you use the money out of the policies, you don't. And you can use it a couple of different ways. Even if you don't pay for their college education and they get loans, you have the money immediately to start paying the loans back. So guess what? You're now leveraging the government's money because your children are going to get subsidized and unsubsidized loans, regardless of your estimated family contribution. So you can pay back those loans immediately with no interest.
Sounds like the third workshop that Darlene is going to talk
Yes.
about. So we can talk about how to get
Yes. And let me say this one thing that I should have said at the beginning, just because we're breaking up into, I don't want people to run off of this live and start saying, oh, well, I got this, or so-and-so has it. All permanent plans, or let me just say this since we were talking about whole life alive, all whole lives are not created equal.
No.
They are not created. There are hundreds of different whole life products. And for the purposes that we're talking about, there's only really about a handful of them. We only found about 3 companies that gives you the ability to do some of these things in the way that's most optimizing, right? So please, don't like, oh, I got a whole life already. That whole life, I promise you, is not the same whole life that we're referring to, that you're able to do some of these benefits. So we'll talk more about that, but I just want to put that disclaimer out there. And before you go back and start talking to people and asking questions, and they're telling you about whole lives that was from 50 years ago, they're no longer on the market, right? They're not all created equal. It's a birthday.
Yeah, Javon,
it's a birthday.
This time, we should have did this another day when we didn't have as much, but we wanted Darlene to know that see, you guys can't see it, but her favorite cake is my husband makes this really good. He's like a chef.
Oh my Lord.
So Bernard made you a cake, and so we wanted you in front of all the people. Today's your birthday, so I'm gonna sing. Come on, Javon. Woo, okay. Happy birthday to you, dun dun. Happy birthday to you, dun dun. Happy birthday.
Happy birthday to you.
Happy
Happy birthday
Go
to
ahead.
you.
Happy
Happy birthday. Happy birthday to you.
Okay.
It's your birthday.
Oh my God, so much. This is on home.
It's a celebrate.
Yes.
Yes.
We got one more. All right.
Yes. Thank you. Thank
It's gonna be
you.
melted all into the chocolate in a minute.
Absolutely. Absolutely.
Yes,
Uh-oh, I see a lot of.
Thank you. Oh my God. Thank you. So I'm just all gone off. Oh Lord.
So
Thank
for you guys to come back, make sure you register for one of those events. I'm gonna post this in Facebook right now, so you guys, we can keep going on. Javon, this was excellent. We have a lot more work to do.
So as always, we here doing Financial Fun Friday. Our whole purpose, we always say, planning is bringing the future into the present so that you can do something about it right now. When? Right now. And so you want to come back on July the 16th to get the part 2 of this very important information. And we thank Mr. Alan Lakin for giving us this quote, because that's what we're doing. We're trying to prepare the older you that's going to be coming so that you can do something about her right now. So when you meet her in the future, you're going to be ready. And so contact us today so that we can map out a strategy to help you put all the pieces together for your financial destination plan. That's what we can do for you here at Affordable Benefit Solutions. And of course, we are a full service financial solutions firm. We can help you no matter where you are. If you're just getting on the road, starting to work, or you're about 15 minutes from walking out the door, we have the solutions for you, as we just went over, the tax-free retirement concepts, what to do with your IRA rollovers, helping you with estate planning, insurance planning. Come back for part 2 next week. And of course, getting the credit and debt elimination. Rita dropped the link for the debt workshop that her and Javon will be doing next week. You want to go ahead and register for that as they talk about getting rid of that debt. And of course, we are your Financial Fun Friday team. Contact us today, 301-577-6340. Any information you saw in here today, we will be more than happy to help you craft the plan to help you meet your financial destination. Again, thank you so much, Dr. Javon Jackson, for imparting all of that information on us. Again, she will be back on July the 16th to finish up. So thank you, everyone. And Rita, if I may, I just want to say thank you so much, Denise. I got your card. I really, really appreciate it. Thank you, everyone, for all of the happy birthdays I see on Facebook as well as on the chat. So we really appreciate it. And it's the real thing here. Yes.
It's the real thing. Yes. God bless everybody. Have a great weekend.
Yes, be safe out here with these fireworks.
Yes.
It's over.
And that's what we give you, the real thing here. So please join us again on July the 16th, and we will see you then. Have a wonderful and safe weekend, everyone. And I am going to enjoy the rest of my birthday and that cake. That is my favorite cake. Oh, yes.
Shaquana.
You better thank Bernard. He made that cake. I ain't gonna tell you.
I am calling him as soon as
Save me a slice. Save me a slice, please.
Yeah, me and Shaquana thank him.
Look, Renee said, save them a slice. That cake, I'm going to have to make another cake for everybody else. I'm right here gonna eat that.
I'm gonna eat that cake. That's gonna be my breakfast. And I'm gonna be healthy. I'm washing it down with water.
You guys, we thank you. We glad you joined us today for her birthday. Next time, I guess we won't be having too much fun. It won't be a birthday. Javon will be able to finish it up without birthday cakes coming flying into the room.
Yeah. I appreciate you all so much.
Thank you so much. We appreciate you guys. You guys have a great weekend. Enjoy yourself. You got an extra day on Monday for those that are off. Most people are. So have a good time and be safe. We appreciate
Thank you, Sharon. All right. Take care, everyone.
Thanks, Javon. See you.
God bless.